Hey guys, Luke here. So today I'm going to be talking about something interesting. Now there's already been a lot of videos about it, and I wasn't actually going to make it because there's already so much out there, but I decided since what happened today is kind of interesting, I figured I'd make a video about it to tell you guys about it as well. So if you haven't seen the news lately, GameStop has been in the news because of the fact that their stock has increased so much in such a short amount of time. Now today I'm going to talk about that and also what happened today. So as you know, GameStop is a video game retailer that has been doing as well lately because of the fact that games have been available for download and online digital play. So that GameStop has been hurting because of the fact that you would have to go into the store or use their website to buy games and receive games that way. Now they have been doing a little bit better because of the new console sales and whatnot, and they're focusing on their website, e-commerce, but that's a topic for another day. Now on a forum called WallStreetBets on Reddit, a user posted about GameStop how their stock was 140% shorted. Now if you don't know what shorted means, I'll tell you real quick. So if you decide to go short on a stock, you basically bet against it. When you bet against it, you're hoping the price will go down. So if you short a stock at $10 and it goes down to $5, you'll pocket that $5 difference. And what you do is you'll originally borrow the stock at $10, I'll say in that example, and when it goes to $5, you'll buy the stock and then pocket the difference like I just mentioned. So the inverse also applies. If you decide to short a stock at $10 and it goes to $15, you're also on the hook for that $5 when you decide to buy back in. This is also a really significant point about when you enter the short position. The price, like GameStop, has increased so significantly, the hedge funds are getting margin call. Now, if you don't know what that is, it basically means since the price has increased so much, you have to put more money back in to make sure you have enough to cover your position. Because of this, a lot of individual investors on a Reddit forum, WallStreetBets as I mentioned, they decided to buy the stock because it was so shorted. They realized that if enough people bought the stock, then the price would go up and the shorts would have to cover. And when a short covers, they have to rebuy that stock. And when they rebuy the stock, they themselves are increasing the price. And other short sellers then are pressured as well. So when this happens, it just creates a bigger price. So this is called a short squeeze. So it gets that name because shorts are being squeezed out. So if you remember the movie The Big Short, Michael Burry,
watch, it will pay. I may have been early, but I'm not wrong.
Who shorted the housing market, he also bought GameStop. He bought this stock in last fall, I believe, and he has 1.7 million shares. So that position was originally worth 17 million. Now I believe it's about 350 million or more. And as the price keeps increasing, his profit's going to be increasing as well. So this could change day to day. What was crazy about GameStop was the fact that the stock was short 140%. This means that there was more shares short than actual shares available. Now as far as I know, there are some short sellers that have closed their positions and there's some that have them still open. And there are even some short sellers that doubled down. They continue to short the stock even as the price was getting higher. They assumed that the individual investor would close out the position and just profit take. So January 28th, Thursday, GameStop and other stocks that were shorted were all restricted from being bought on Robinhood and other brokerages. This happened early in the morning where you could only sell them. Now there was some confusion on what was going to be happening. So if at 9:30 could you buy the stocks back or would you only be able to sell for the future? Now this quickly came to realization at 9:30 when you could still only sell. This means that Robinhood was actually restricting shares being bought on Robinhood. Because of the fact that Robinhood and other brokerages weren't allowing people to buy the stock, the price started to dip up to like 50% on GameStop and AMC. Many individual investors became angry and mad at Robinhood and the other brokerages. They started claiming that this was manipulation of the market. Many people began to post 1-star reviews on Google Play and the App Store because of the fact that they were mad that they couldn't buy the stock. And they also began to say that they were going to remove their Robinhood account and switch to a new broker. Robinhood released a statement pretty much stating that they were trying to protect the individual investor, but come on, really? When hedge funds are allowed to short 140% of a stock, and the second it doesn't go their way, they decide to change the game? That is not really fair to the individual investor or the retail investor at all.
Keep the clients on the Ferris wheel. And it goes. The park is open 24/7, 365. Every decade, every goddamn century. That's it.
I think it's also a little bit suspicious the fact that they decided to do this all the same day with many brokerages. Many people are now calling this the suits versus the retail investor. We have been seeing this now in the mainstream media, My sister actually sent me memes about it, so it's been pretty much put out everywhere now. Dave Portnoy pretty much said that anyone associated with this massive manipulation here should go to jail. Now, to be honest with you, I don't really think anyone's going to go to jail here. At most, they're probably going to get a slap on the wrist. If you look at 2008, pretty much no one went to jail, so why would anything happen here? Now, I do think this is a big enough deal. Someone's probably going to have to pay for this. It's probably, like I said, a slap on the wrist, but you never know. Someone could go to jail, but I doubt it. Now, is this the first time that there has ever been a short squeeze? No, absolutely not. What's really interesting here is the fact that the WallStreetBets form and all these individual investors coming together here. Now, there has been some speculation on what's going to happen next, but no one can say for sure here. The SEC said that they're monitoring the situation here, and the White House said they're also monitoring the situation. So, I don't know what will happen next, but I assume that the government officials are looking into the situation here. There's also many politicians here that are wanting the Wall Street people to pay for this, and that they're trying to take advantage of the retail investor. Now, to sum it up in a basic sentence here, the retail investors are getting one up on the hedge fund managers, and the hedge fund managers are mad and trying to get them to back off. Now, Robinhood basically made everybody not allowed to buy any more stock on specific companies, and that made individual investors mad. So now we're having a little case here against the suits versus the individual investor. So I'm not sure, like I said, I keep on repeating what's going to happen next. I'm not sure, but it's the truth. No one really knows what's going to happen next. It's such an unprecedented time. So really, all I have to say other than that is make sure to like and subscribe if you haven't already. And other than that, I'll see you guys next time. And have a wonderful day.